Hello and welcome to the NWR Virtual Investor Conference. I'm Andrew Gagan from Ausbiz. Great to have you join us again. Our next company we're looking at is Family Zone, ticker code FZO. Family Zone Cyber Safety aims to support and protect every child's digital journey. The company is an emerging leader in the fast-growing cyber safety industry and has patented cyber safety ecosystem, enables world-first collaboration between schools, parents, and cyber safety educators. Family Zone's unique approach is delivering rapid growth in the education sector, as well as through direct sales and scalable reseller arrangements with telco providers. It has a growing presence in the large US market, which makes up more than 80% of its customer base, with a huge opportunity for potential growth across more school districts. Just a reminder, if you'd like to ask some questions, make sure you submit that at the end of the session. That's in the Q&A panel on your screen. Just tick into that. And now let's hear from Managing Director of Family Zone, Tim Levy. Tim.
Thanks, Andrew, and thanks everyone for joining. It's a strange day today. We've just gone into a trading halt. So there's some things going on in the background to this presentation, which I'm not really at liberty to talk through to today. I'm sure people will try asking questions anyway. But if you are interested in finding out what's going on and you've got a relationship with the joint lead managers in this process, which are Shaw's in Melbourne and Euros Hartley's here in Perth, please reach out to those guys and you'll find out more. What I'll concentrate on today is really kind of positioning Family Zone and our amazing last 12 months. And then I'll talk to the future for our underlying business. And I'll also briefly talk on our overarching corporate strategy. I know a lot of people on this call have heard me bang on about this before, but it is truly important and it is truly what's different, marks the difference between us and all of our competitors. We have a very, very much a child-centric focus in what we do, which is in cyber safety. So we are different to technology security businesses, cyber security businesses. Our emphasis is on protecting a child's digital journey. And why that's unique is because we have to, in doing this, deal with all the potential custodians of a child's digital experience. For instance, the CTO who's responsible for keeping the kids, delivering duty of care within the school institution. We're responsible for supporting the needs of a teacher who's trying to keep the attention of kids in a class. The head of boarding school if the kid's in a residential arrangement. We have to deal with kids sharing devices, kids bringing personal mobiles to school with parents. Split families, you name it, all those uniquely, family and school-oriented challenges. We're the only group in the world that's chosen to take on that challenge. We've had some really remarkable growth in the last couple of years. We entered the US, just to put it in context, we entered the US, which is now a core part of our growth. It'd be 90% of our revenue is out of the States. We only really entered the US proper in early 2019. So just over 2 years later, we've gone from really 0 US students to now 3 million students on our platform. Year for year, at this time last year, 30 June last year, I think we're at 1.2 million students on the platform. It's now over 3 million. The growth has been quite remarkable. In annual recurring revenue terms, on a comparative basis, we've hit $15 million of recurring revenue last month. And again, it's about 95 to 98%. No matter how you measure our business, we're growing at 100% or thereabouts year on year. We have been doing that for a couple of years. And now that's finally, being reflected in our market cap, our share price at 260 million market cap. We've got a lot of that, achievements now built into our price, but also the prospect of that continuing to grow. But not only in the B2B sense, which is our core business, but also in our consumer part of our business, which I'll talk about in a moment. Actually, that figure there on the right is wrong. We've nudged over 4,000 schools on our existing platforms, which is a huge achievement. Just to also put this in context, our growth, we added in the last quarter, so the June quarter this year, 3 times as many students on our platform as there are students in the whole of Western Australia. So we are now truly a global player, and I'll talk more about that in a moment. Quickly, let's talk about our product sets. We, in our education part of the business, which is that top line, we have really 3 product verticals. School Manager, which is our standard compliance product we compete against on-premise filtering technologies on servers sitting in school networks. We compete against cloud managed situations. What we have that's unique is the ability to support all of those situations, all those kind of architectural requirements of the CTO. We are without doubt the leader in that space now, and I think our growth shows that. Again, to put our recent achievements in context, in the US, it's around about 15 million students come out of contract for this sort of compliance product every year. And last year we added about 11 or 12% of them off a base of about 2% of the market. So we are massively outperforming in that market, and it's because of that product. That product is without doubt the best product in that space, and now the market's starting to see that. And as a consequence, we're now starting to be introduced into bigger and bigger deals, including Region 7, which is the biggest procurement district in Texas. We won that earlier on this year, which is a 160,000 student deal. And now we're participating in a statewide deal in Canada and literally an entire state in the US. So it's amazing. That product, it's a profitable product, but it is no doubt the Trojan horse that introduces our product into broader community opportunities. Class-wise, is the technology that allows teachers to see what kids are doing in the classroom, to block and open up the internet, message kids, to have complete control of a kid, whether they're sitting in class or sitting at home in a virtual classroom, which has become all too frequent with COVID. That 5 years ago was a nascent technology in the US, and now it's ubiquitous. Pretty much every would be about 80% of schools in the US now have that technology, and in the UK, it's closer to 100% of schools have the ability for teachers to control what kids are doing in the class. We've got a pretty compelling product, and that's now we discount that product less, and that's now growing quite quickly in our sales in the States as well. The third product stream we have, the reason I put it in white is because we've got a decent product in there. Essentially, this is technology that uses the data that we have access to look for indicators of risk like suicidal ideation or gun violence or radicalization or whatever. We have a free product in there, but there are some more advanced products out there in the market that do things, all of that, plus a bit more. For instance, they have human moderators that sit there and receive those insights and intervene if a child's at risk. We don't have that piece yet, but that's a very compelling need for our business that we're building into. Then below the line here, the second line is what we have that none of our competitors have, because again, of our interest in that full holistic solution to a kid's digital journey. We have what we call community, which is the ability for schools to roll out our expert content, websites, school branded materials to provide everything a parent needs to know about the kid's digital journey, from suicide to sexting to Omegle and TikTok. That platform is fully integrated into our platform. So the content in community is fully integrated into our platform. So if a kid installs TikTok, mum and dad get advice about what TikTok is. They get taken to the school's website to find out what the school's view of TikTok is. So we're closing that loop to provide a really unique solution to the school. Part of that community offering to the schools is a free version of our parental control product, which is called Insights, and that allows a parent to see what their kids are doing online. And if any of those things concern mum and dad, that's when they can upgrade to our premium product. Those icons in here with the dollar symbols is where we earn our revenue. That's our subscription base. Everything we do is recurring revenue, and the dollar symbols there is where we drive our revenue. Here's some quick highlights on the last quarter. Rapidly improving cash flows. I'll just highlight to people watching that because of the sales cycle in our business, most of our cash flow, like 2/3 of our cash flow, is in the second half of the calendar year. Last year, last financial year, I think we collected $12 million from customers, of which $7.5 million was in the second half of the calendar year. So that's where all the cash flow comes in our business. We've invested massively in fundamentally improving our ability to scale. I highlight here the GCP migration. Many people have followed our journey have known that we've been moving our data and hosting platform from Amazon into Google because it offers pricing benefits and some capability. And that process is now completed, and our data and hosting costs, as we recently announced to the market, have dropped by about 2/3. So we're very rapidly getting to what we consider as like an industry level price point, which makes it sustainable. So by this time next year, we'll be industry level cost structure and flying. I've also done a lot of other things in building our organizational capacity. 90 strong engineering team is one of the biggest engineering teams in Australia, certainly with product-based business. CFOs, VPs, ERP systems, you know, we even entered Canada and with immediate success. So everything in our business is now really looking like a real contemporary business, and you know, suited for a company with a 250 million market cap. ARR growth I highlight here on the chart at the top, and the words here are slightly missed, but we're at 5.2% of US school districts, which I'll repeat that. You know, 5.2% of US school districts now use our technology. At the end of March, that was 3%. So that is unbelievable growth. No matter how you slice it up, our B2B business, which is principally selling technology through US schools, is on a tear. So what next? At the moment, our focus is the kind of tail end of the US sales cycle. So the US sales cycle is typically between April and September. So we're in that second part of that, which is the runoff of schools being allocated new money, because most school districts in the US get their fiscal year kicks off on 1 July. But in Texas, their fiscal year ends in August. So we're getting the kind of runoff of the last year's spend in Texas, and then new allocation of funding through September. So bottom line, big period of sales growth happening right now. Last year, we added as many students in the September quarter as we did in the June quarter. So I think the market should probably expect something similar this time around. Whilst all that's going on, we're selling into Canada. We're competing and looking, you know, really strong in some massive statewide deals. And we're also launching, as many people know, our consumer offering through the schools, which I was just touched on before. So it's the content piece to schools, it's the promotion of our parental control products and so on. And that's being trialed now in 4 school districts, getting really good feedback. And we're shaping up for a proper launch in the back to school period, which is end of this month and into September. The Australian and New Zealand, you know, that's definitely a smaller part of our business now. I think our ARR from those 2 markets is about $3 million. And that sales cycle kicks off in October and kind of wraps up at the end of December. So that's really what we're focusing on at the moment. I think if the market wants to look for things from us, other than the corporate moves, it's kind of completing this US sales cycle. It's the B2B2C launch, the consumer launch in the States, and then big, you know, cash collections through this half, and then we kind of kick it all off again into next year. So corporate, I'll just, oh, that's an old slide there, but I'll take the opportunity now to talk to our corporate strategy. We did a capital raising middle of last year, and one of the arms of that raising was we wanted to build our business up so that not only are we accelerating scaled business, but we can absorb, so we'd be prepared to absorb other businesses into our platform. We see ourselves as a platform in the broader sense of that word, from a technology platform, but also as an ASX listed vehicle. We can bring other technologies, competitors maybe, into our organization and offer them a chance to not just exit from whatever they've created, but join us on that journey. So we truly talk about ourselves internally as a platform. And we did one of those recently. We brought a group called NetRef into our family a couple of months ago. A very successful classroom management tool with about 240,000 students on their platform. Had some really compelling features, but a really compelling cost structure. So we brought that team into our business at the end of June, and they're doing incredibly well. You'll see that flowing through the numbers in our September quarter, but we're incredibly delighted actually with what they're doing. And then, you know, NetRef, the deal that we did there again a month or so ago with the capital raising at the same time, that was also about making sure that the broader market, you know, capital market and the market I actually operate in, is aware that we're kind of ready to do business, that we're ready to do the next level of kind of corporate deals to mass up this business. Ultimately, if you think about what we're trying to do, I need scale because we've got, you know, we're investing heavily in fixed costs in building out products. So I need scale to amortize those costs against, but I also need scale because I'm trying to sell through to parents, which is a massive piece of leverage in our business. And finally, I need scale because ultimately our industry is about data. You know, the more data you have access to, the more insights you can deliver to parents or to teachers or pastoral care functions to keep kids' attention and keep kids safe. So we are unapologetically aggressive about growing this business because this market doesn't stand still and we need to grow. So look, and that's probably a good way to think about today's announcement. And what you'll hear more in coming days as what we're doing at the moment comes out by the end of the week. That's really it for me. So I might just hand over for Q&A.
Tim, thanks very much for that. All right, let's get to the questions. The first one, how do you view your cost base at scale? Does a customer acquisition cost improve from here?
Yeah, massively. I mean, that's one of the amazing opportunities of the US market is when we started there 2 years ago, 2.5 years ago, we were generating all the leads ourselves. So we had 4 people on the phones making 170 calls a day, literally generating those leads, and then we'd feed those through to the reseller channel, who would then facilitate the contracts, because if you didn't do it that way, you have to get involved in tendering. As now, like 2.5 years later, almost all of our leads come from the channel. So just to explain what that means is you have these big technology resellers in the US that are providing managed services and software and hardware to schools. And that's done through that method so that schools, just like any public sector organization, can avoid tendering. So, ultimately our marketing job is to build relationships with the channels, so they're selling our product for us. The more we can do that, the less we need to invest in acquisition costs, and that's now winning. Our sales team of about 14, 15 staff is really probably only 50% smaller than our biggest competitor in that market, which is $55 million US of recurring revenue. So acquisition cost isn't an issue in our business. You can really be product led. Fixed costs, of course, is a challenge for businesses like us, because we've got a fixed cost here and you're just trying to grow your contribution above it. But we're rapidly improving our cost structure and rapidly building scale. So if you do the numbers, or if you look at all the analyst reports from the likes of Euroz Hartleys and Shaw's and BDO Equities and Argonaut, you'll see those numbers, and the crossover point into next year is what they're all forecasting.
Okay, thanks, Tim. What can you tell us about the innovation program and the new product pipeline?
Yeah, look, so going back to those 3 arms of our product, our compliance piece is second to none. In a fair fight, and what I mean by fair fight, when the buyer isn't concerned about who is this Aussie company, as compared to us fighting against Cisco, which we often beat, no one can match us. For a complex organisation like a school district, 100,000 students, I don't think anyone can match our capability. Classroom management, we're probably the second or third best product in the market in the US now. We've got a bit to go. We're priced at around about $3 per student per year for that product. As a premium product, you can probably double that. So we're definitely investing real money in building out the capability there. And then the third piece is all about data, analytics, well-being, supporting the pastoral needs of a school institution and kind of the branding requirements. That is a premium product. Some of the products we compete with earn twice as much per student than we get across all of our portfolio. And so that's where we're investing a lot of money. And that's kind of where that Google deal came from, because their data capability is unmatched. So it's coming. We'll have our first products to market in the next couple of months. Certainly before the end of Christmas, we'll start be generating real revenue out of that.
Okay. And how do you think about the size of the company's addressable market as you look beyond Australia, New Zealand, and North America for opportunities worldwide?
Yeah, so the immediate addressable market for us in the US is about close to 60 million students. And in the compliance space, that's about $180 million US of business per year. In classroom management, that's probably about 220 million US of business a year. And in the kind of escalated, cyber safety and data analytics type products, that's probably closer to 350 million of total addressable market. That's just the US. Add to that the parents, and you can kind of just keep adding zeros. Like the parental control piece in the States is massive, because it's less than 15% of parents using parental control tools today. So it's just a massively untapped market. And I think I feel confident saying that our approach to accessing parents through schools is now proven. We just now need to execute that into the States. The UK, which is a very attractive market for us for a whole host of reasons, English speaking naturally, but it's got scale, it's got 10 plus million students, and those students are all mostly organised through what's called a MAT, a multi-academy trust, which is just like a school district in the States. So you can get access to the decision maker You can use your distribution to sell for you. You can deploy your technology instantly because they've got sophisticated tech teams. The UK is an outstanding opportunity for our business that I'm itching to get into in scale.
Okay, and this question coming from Dev, do you compete against Red Piranha? That's the other Australian cybersecurity tech company.
No, not at all. We're very much, whilst our underlying technology is quite similar in some areas, yeah, we're a cyber safety company. So our interest is on protecting the user, not the information. That's the distinction.
All right. And how do you see the company integrating the businesses it's already acquired?
Yeah, look, so with the NetRef business, we're running them in parallel at the moment. NetRef has been designed to be a standalone classroom tool that you can run on top of any other filtering product. So it serves us brilliantly actually at the moment, because it means we can get out there and sell a classroom tool on top of any or all of our competitors. And then that becomes a cross-sell opportunity for us to sell our compliance piece, the school management product in. So that's working really well. I don't want to break that at the moment, but in time, we'll more fully integrate those tech teams and the features will come together. But at the moment, yeah, it's working fabulously well.
And Tim, just in regards to COVID, the situation obviously differing depending on where you are on the globe, but we obviously know the impact that it's having here in Australia. Has that actually provided some opportunity, I guess, given homeschooling has come to the fore? How's that, what sort of opportunities has that presented to you?
Oh yeah, amazing, transformational actually for our business. Yeah, because I think the capital markets finally got what we're talking about, because their kids were being sent home, and you know, stockbrokers and investors were seeing that their kids were being consumed by technology, you know, at home and being so easily distracted. Right, that's the reality of classrooms. So that's what our technologies aim to deal with. But beyond the atmospherics, yeah, you had 57 million kids in the US sent home in a month period, and the legal obligation to keep kids safe continues. If the kid's using a school issued device, or if the kid's in class at home, legal obligations, legal duties of care continue. And that manifested in a massive funding program in the States. Something like $60 billion have been poured into the US to support digitization, online learning, virtualization, you know, the repercussions of COVID from learning from a technology standpoint. And that meant that there was a lot of schools that previously addressed their obligations by locking up devices at school, after school. They found that those kids had to go home. And so our industry, that classroom management part of the industry, just popped, went from 20% of the market to 80% of the market overnight. And then instantly there's a worldwide shortage of Chromebooks, as schools in the US had endless money to buy devices to give to kids to continue their learning. Now, once you give a year 4 or year 3 kid a Chromebook in the States, the next cohort of kids coming in expect a device as well. So that just blew up our industry instantaneously and forever. So the addressable market in the States exploded, the funding involved exploded, and now we've got the product at the right time. It's been amazing for us.
Tim, thanks very much for the presentation. Thanks for joining us from Family Zone.
My pleasure. Good to see you again.